Good evening, everybody, and welcome to another edition of Live Market Analysis. It's a pleasure to be with you as we check out everything that happened during the week in markets and look to the week ahead. The disclaimer before we get started says that everything we're going to discuss this evening is general in nature, has not taken into account your personal financial circumstances, objectives, or particular needs. So before acting upon any of this information, you should consider it very, very carefully or seek the help of a financial professional to determine its appropriateness to you. It's always important to remember that trading, investing is risky. Markets go up, markets go down. They might not go the way you want them to. You could lose money. It's always you who's responsible ultimately for the stuff you choose to do, and not me. It's your choice. Without further ado, let's get to the nitty-gritty of tonight's presentation, which is where you ask me questions about the stocks you're interested in. I'll give you my best technical analysis reader for what it's worth, and you could also ask anything about the 3 M's of trading, so money management, mindset, and methodology. Let's head over to the Amy Broker screen, where we've got the Nasdaq Composite on screen. We'll do our portfolio management model first, and let me just check. I've got your comments going. Good. We're going to say or remind ourselves that last week we were moving towards a 50-50 risk weighting in the market. So, let's say hypothetically you had $10,000 that you could invest in the Nasdaq. You'd have $5,000 invested and $5,000 in cash. It might sound really conservative, but it's not exactly the double green bull market that we had over here where we were fully invested. So double green by definition was fully invested 99.9% of the time. We might have a double green where there's some really bad candles and we might take a little bit off the top. But if we look at the current situation, we're still very much orange short-term trend. So indeterminate, equilibrium, demand and supply are roughly equal, and orange long-term trend as well. So both the short-term traders in the market, they're the ones controlling the short-term trends, and the longer-term investors, positional traders, they are roughly equal, roughly balanced in terms of their participation in the market. So that's where we are. It makes a lot of sense in that regard. But we're not far away potentially from moving to the next level up, or actually to the next level down. And let's talk about where that might occur. So look, futures are up. I haven't checked them the last hour or so, but last time I did check, they were up about 3.5%. So that would indicate a close. Not a close. Oh, that's a Freudian slip. An open around about 18,500 even. And if we were to close there, that's where I was going. If we were to close high on the session, not just up, but high on the session, it would, for all intents and purposes, confirm this long-term uptrend has begun for me, because we have hit the long-term trend ribbon. We've done a little dink. We've tested the supply there, and how much supply was waiting at that long-term trend ribbon to sell. And that's the whole point of these dinks. They're super important because they speak so much about how much supply is actually active in the market, and or how demand is prepared to deal with them. And we've seen a little bit of supply, and still, if we get up there and close up there, lots of demand. So the markets, I think, it'd be hard now to argue for even the most ardent skeptics that the bear market isn't over, that this is just a rally within a bear market. And if we get to this sort of price action with that sort of an emphatic, finish tonight, it's going to put a lot of cash in the wrong place, i.e. there are going to be fund managers out there who will really start to regret not putting that cash to work earlier, and then start to fear missing out in terms of underperforming the benchmark, which is obviously heading up. So that should just, it's going to bring in momentum traders as well, who are obviously looking at similar things to us. So it should just put that extra weight behind the demand side. And we don't want to predict the future any further than that. And we haven't seen it yet. We still need to get that high close today. If we don't get that high close, so we pop up but then get a big black candle, because all we get during the session is just selling and selling and selling and selling. Because don't forget, if you're a big fund manager and you don't believe the rally, and you do believe that this is just a rally within a bear market, and you're waiting to get not only good price, but good liquidity, that's the key factor. If you're big, the best time to sell is when everybody's buying, because you have lots of shares to then hit the bid on. So tonight is crucial, because not only are we going to have that price increase, we're probably going to have a lot of liquidity, a lot of demand there from short coverers. Don't forget, people are covering back shorts. They're going to be under pressure tonight. And, positional, fear of missing out funds, index trackers, Lots of liquidity on the open. So if that liquidity is met by the supply side, and we'll see it in the black candle or long upper shadow, then that's something we need to be concerned about compared to if we're close on the high, which tells you actually the supply side isn't there or wasn't there, and why weren't they there? They're getting these great prices. Why weren't they there? Clearly then, that tells us that there are a few doubters, and that's always a good thing. And the people that are on the supply side, they want to hang on. They want to get more, or at least they believe they can get more. How much more do they think they can get? Well, we'll check out how we go at 20,000, because undoubtedly we're going to see a bunch of latent supply up there, because everybody who didn't switch their super fund to cash at 20,000, who regretted it for the last 3 or 4 months, will go, here's my chance. Not everybody, but some of them will. So let's see how we go tonight. It is an important milestone. Milestone is I think an appropriate word. It's what a milestone it is to even be here having this discussion, given how crazy things were back at those April lows. Let us move on to our ASX 200. Where was I? I should finish that thought. So look, if we get the big white candle, then we start to move, okay? Because I won't see you for another week. If we get the big white candle, we start to move to the next level up, which is 2/3 invested. And I think if we get the white candle, don't you agree? Like, that's a perfect place to be. 2/3 invested, but still 1/3 cash. Still way more cash than your average balanced fund, who can go as high as 10%, but they never do. They're generally about 5%. So if we get that signal, we'll become a little bit more risk-seeking rather than risk-averse, but not completely fully invested. Now let's go to the ASX 200. And this one, we had said already that we were around 50 earlier. I think at least a week in advance we'd moved there, because we traded above the long-term trend ribbon, which had turned green by our last update. So more happy to be more risk on. I don't think I said 2/3. I can't remember, but I think we can. I think we can start. Well, I know we can now, because if we're talking that way about Nasdaq, then we must think that way about the ASX 200. So happy to move more towards a 2/3 risk level here. And you're not going to get there overnight. We're going to find some trades tonight. We might find a few tomorrow night, the next night, and we'll work our way towards that. Today's candle, obviously not ideal, but it's so tiny in the context of things. I'm really not concerned about it. But yes, there was some sell the rally activity going on tonight. And that kind of tells you that the Aussie traders really didn't believe, or don't believe, that they're going to make it stick tonight, which is interesting in itself, because we've been leading, not following. What does that tell you? Okay, let's do the whip around the grounds. Let's head over to the Russell 2000, see if there's anything in the charts to push us off this portfolio management position that I think we should be. And you can have your own opinion, and your opinion's valid as well. Let me know in the comments what you're thinking about it all. There's nothing in this chart to push me off that. Happy to continue with what I said. The Russell 2000 is always important, because it is a really key risk on gauge of US equities. And if US equities were going to hell in a handbasket, they wouldn't be looking better. I wouldn't say they look good, because we're not even anywhere near our long-term downtrend ribbon. Well, it is a downtrend ribbon. It's not a long-term trend ribbon, because I start calling it a long-term trend ribbon when it's amber. I call it an uptrend when it's uptrend, downtrend when it's downtrend. This is still a downtrend. So think about what that tells you about the real sort of corporate heart of the US there. It is lagging. It's lagging some of those big indices that are dominated by those large cap stocks. So that is concerning. But is it enough to push us off our thesis from before? No, it's not. It might be enough for you, but for me, no, it's not. Let's head over to Europe now, and let's check out what's going on across the pond there. V-shaped rallies, that's the important thing we're looking for here. V-shaped rallies are the best sort of rallies. They're the most sustainable, and they do speak, therefore, of really strong demand coming in and supply actually pulling back. So that's important. The DAX has made a new all-time high. I'm not kidding. How about that? I missed it. I check this once a week with you lot. And that in itself would suggest that maybe the world isn't coming to an end. The Euro Stoxx 50 was still on weekly charts here, not all the way back, but still a V-shaped chart. The FTSE, ditto, and the Spanish market also at a record high. Let's head back to the daily charts. Heading across to Asia, very nice rally there on the Hang Seng. That's important too. The Nikkei, recovering well, but lagging many of the other indices we've seen. And that's a really big breakout there. It did come up in the general scan. I didn't put it in. If you remember, asked me about the Nifty 50 ETF here we have in Australia. Didn't quite make the list tonight, but was very, very close to doing so. And looking at that, I'm thinking maybe it probably should have made the list, because that's a chart I would love to have some risk on. Let's head over to Shanghai, and that's actually looking pretty good there. Can't complain about that one. So definitely improving. And over to the A50 shares, also looking very solid as well. So that all that ruckus in April just seems now, with the benefit of hindsight, like such a waste of time, doesn't it? Waste of time, energy, effort, and profits ultimately, because before that we were writing some wonderful trends that came undone very quickly, unfortunately. We're going to head over to the base metals now. But anyway, there's no point blaming the market. That's a pointless exercise. It is what it is. Aluminium, are we seeing the global economy improving here? Not really. That looks pretty average. Copper, oh, look, that's improving, isn't it? That's getting better, but not as good as it was pre-ruckus, because that was a really nice trend as well that we were following. Nickel was, I was going to say, pretty lousy before, and it's still pretty much that way, but that's not terrible. Lead popping up, that's nice to see. Tin, neither here nor there, but not terrible either. And zinc was terrible, but maybe coming off the lows a bit. So I don't think there's anything really too sinister going on there as well. Lithium carbonate, plummeting down. I haven't done tonight's update if you follow me on Twitter, but it is coming, because I'm still waiting for the spodumene quote to come through. I don't think it's going to come through tonight. Maybe they've missed one today, but that was up today. That did bounce a little bit today. And we're seeing some of those ASX lithium stocks bounce. I think some corporate or some takeover business going on there potentially, with Liontown at the centre of it all. But I digress, and I don't want to do that. So let's head over to our trading view screen, and we'll finish off this whip around the grounds with a look at silver first. We'll go through precious metals, and then other metals, and then energy contracts. Neither here nor there. It doesn't really require any comment from me, does it? We've got now a short-term downtrend, it looks like, against a long-term uptrend. That is equilibrium. Gold is pulling back. I'm pretty sure on Monday, what would have Monday have been? I guess 5 that day there. So we had a decent candle, didn't we? This time last week to look at, bouncing out of that short-term uptrend ribbon, and probably would have said, like, hey, this is decent now. We need to see how it behaves around that high, because this is going to be, and I'll go check the tape, I'm sure I said this, a very important, a very powerful point of supply. We don't want to see a lower peak come in, particularly with really bearish candles, because we're concerned about that ASX gold sector. Massive black candle, species-ending event, I called it at the time. And that could have been fund managers, because they're very active here in Australia. Global fund managers very active on ASX shares, because we're kind of the canary in the mine shaft. That it could be something more sinister. And that candle there and that candle there tells me that it is something quite sinister, actually. And we're in a bit of a topping phase here, I think, for gold. More and more that way. I think we're in equilibrium now. Well, we are, because the short-term trend has gone amber, but also with those lower peaks. And if today's candle does so, we could end up with actually lower troughs. So actually really changing the price action trend, changing the trend ribbon trend, with, I think, some pretty serious candles, supply side candles coming in at peak 1 and peak 2. I have to conclude that we are at best equilibrium in the short term on gold, but probably worse than that. Long-term trend is still up, but I can't help but think we've seen a peak here for a considerable period of time on gold. So however you want to extrapolate that. Heading over to copper, roughly in the middle. Let's keep moving. No point spending any more time on that. And we're seeing iron ore actually pop up today, pretty close to $100 US a tonne. And that chart doesn't look terrible, but it's far from looking good. Something that looks half decent now is the uranium chart. We've got a little bit of a higher trough there, and that is the first trough that it has logged above the short-term uptrend ribbon. I'm going to say it's the first time it's done that since back here, all the way back in October last year was the first trough. And if we go for the first rising trough, you'd probably have to go back to September. And even then it wasn't a green uptrend ribbon. So it's in terms of higher troughs, like that's the last higher trough for uranium logged in a short-term uptrend. So I think there's a little bit of significance here. Let's see how it behaves at the long-term uptrend ribbon to see if that trend changes. But we're actually seeing a bunch of uranium stocks starting to appear in my scans now also. Having a look at some of those energy contracts. We'll keep it simple. We'll just go for Brent crude oil here. Oh, that's a decent bounce off the low. I guess if there is some sort of resolution or perceived that way of the US-China trade issue, then energy should rally, along with some of these other base metals as well. But that's just chop. It's just horrible chop anyway, at best. And the coal trades charts are not great, but probably starting to build some sort of base pattern there. All right, let's head back to the bonds. We'll finish off with the price of money, starting off with US 10s, the benchmark risk-free asset in the world. We're actually seeing yields rise here. And again, the narrative as to why is always important, but I don't think it's something so sinister this time. So ordinarily, if rates are heading up, it's not good for stocks. And you kind of have to follow the macro narrative. And the macro narrative at the moment is that the hard data, so hard data is like employment data, maybe something like durable goods, housing market data. Soft data is sentiment surveys. Okay, so business and consumer sentiment surveys. The hard data is still very strong. You would have heard this narrative. Soft data is weakening, but hard data is still very strong. And we've had this Fed pushback at their last meeting with Jerome Powell really demonstrating absolute zero desire to placate President Trump with a preemptive rate cut because he's so slow, of course, always behind slow Jerome, was it? So that's what markets are responding to here. So I don't think it's we're selling every US asset we have, and that includes US risk-free, and then therefore the bond market's going to hurt us. I don't think that's the case. I think that's also being borne out here on the US 2s because we're seeing more of a pushback against Fed cuts here than anything else. That's my interpretation. So not sinister for stocks at this stage. Aussies actually moving up significantly there, I think, on the 10s and also the 2s as well. So we're seeing a similar sort of factoring out of RBA cuts as well. I mean, we're supposed to get one as soon as 7 days from now. I think there's on the 19th, we'll get a decision. Well, that can't be right because it'll have to be the 20th because it'll be a Tuesday, won't it? I think the meeting is 19 and 20, and then we'll know on the 20th. But that's markets there saying possibly not. But it's not bad. It's not bad because what we're seeing here is the US economy isn't going into the toilet. The global economy probably isn't going into the toilet, or at least not very quickly because of some of the things that have happened since. And that's why we're seeing stocks rally. And with yields going up, bond prices going down, aren't they? So we're selling bonds and switching into cash. So we're selling risk off and switching back into risk on. And that's my take on things. So a more benign environment for stocks today, certainly than last week, and certainly then, say, a month ago. Make of that what you will. Let's head over to your requests now, and we're going to start off with the offline requests, just to ensure that everybody who can't make it tonight, I know not everybody can be here live with us, gets their say and gets their questions answered as well. That's really important to me. Let's go back to the line chart here, and your screen will change in a second. There we go. And we're going to kick off with Mick, who had NVX Novonix as an aggressive entry. It's not really an aggressive entry. It might be a turnaround setup in a little while. Remember, an aggressive setup, we want to see a distance between the price and the long-term uptrend because if we believe that we could sort of hit that level and come back down again, we want to make at least 1-to-1. So just for everybody, I know hopefully we cleared up a lot of confusion about the turnaround setup last week. There's 10 times as much confusion about the aggressive setup because I get asked stuff like this. Aggressive entry is not an aggressive entry because we can't make 1-to-1 into your long-term downtrend ribbon, and also we don't even have a long-term uptrend there. So no, it's not aggressive, and therefore there's nothing I can do about it. It's certainly not a continuation setup because I don't have double green. It's not a turnaround setup because I don't have an amber long-term trend ribbon. So it's just a nothing. It's just a short-term, improving short-term trend against the long-term downtrend, which is ultimately smacks of equilibrium. And why are we trading equilibrium? Equilibrium is indecision. Just as many people think it's great as just as many people think it's terrible. We don't want that. We want everybody thinks it's great. That's consensus. As trend traders, that's when we're going to trade. So no, I've got nothing for you on that one, Mick. PNV, maybe you could argue it's closer because there's a little bit more distance to the long-term downtrend ribbon. There are some decent candles coming in here and on Novonix. Don't get me wrong. Short-term demand side control, I'd go so far as to say. But it's just not a trade for me. Oh, coal, but it's going up and I desperately want to buy it because it looks so cheap. Go buy it. Knock yourself out. Scratch that itch. Just don't ask me about it on Monday night. Let's go to ASM, which is potentially for a zero risk position. So this was not aggressive. This was a turnaround setup. We did say it was a little bit more risky than your typical one, but I'm not trying to walk back from those comments. But I want to highlight the fact of why it is a bit more risky because we had these two giant big supply side candles. So going in on this candle, which is what we suggested, was always going to carry a little bit more risk. What did we say? We said FRP as recently as this candle here. We did have a trough formed here. So today's the one. So Mick's on the right track. Today's really, I think, the day where you go flat again and say, well, not this time. Didn't work out. And I think ZRP is the place to be. Given today's close, the severity of today's candle. I know it's holding the short-term uptrend ribbon, but if you added a third here, I mean, you're not going to split that third into thirds, are you, on the way out? I just think you say, if it goes back up, I'll have another look at it. But in the meantime, that third I added, and that's all we would have added because you wouldn't have had an opportunity to add another third. There was never a reason for it. You'd be getting out of that third down and going, not FRP, but ZRP on screen. So I agree with your assessment there, Mick. Let's go to Peter, who's got SGI as a continuation setup. This is very clearly a setup. We've got double green on screen. We've got price action that is rising peaks and rising troughs, which is the stuff we should have really on all the setups. On your aggressive setup, on your turnaround setup, is it fair to say that they have actually many, many things in common? We should have a light green trend ribbon, a short-term trend ribbon, light green short-term trend ribbon. We should have rising peaks and rising troughs. Okay, good price action if we can find it. A predominance of white candles. The difference here is with double green as well. There's nothing here that I don't like. Today's candle wasn't ideal. It's slightly indecisive, a little bit of an upper shadow there, but still overall the demand side you would say was in control of today's price action as it was in the previous day with that long downward pointing shadow. So we're talking about this one here, and it certainly was there, and it certainly was there, and it certainly was there, and it certainly was there. So there's no doubt about this one. The only thing that we are contending with, and Peter has correctly identified it, is this idea of $1. And we're starting to see it having a little bit of an impact on the price today because, people, we're very simple creatures, aren't we? If we bought it at 50 cents, were there a bunch of people that got in around about 50 cents? That's 50 cents there. Yeah, look, probably were. They're doubling their money in a relatively short space of time. It was only February, that it was 50 cents. And they've doubled their money. And some of them are going to want to take profits here for no other reason, but they've doubled their money. They're not thinking about trends and things like that. They're just giving themselves a big pat on the back. So we're starting to see, I think, the influence of that supply level being borne out in the price action today with that upward pointing shadow. Peter's saying, look, should he just wait until it breaks? I don't think you have to wait to the break. You just need to wait until you see a signal from the price action that it's no longer a problem. That wasn't today. Today it's saying it still is a bit of a problem. How do we know we've got that upper shadow? So if we see a candle that doesn't close above $1, but closes in a fashion that suggests to us that $1 is not a problem, because if we close like that, there was so much demand, it closed on the high at whatever it would be, 98.5 cents. Now, if you're closing on the high at 98.5 cents, probably on good volume because you're starting to clean out that supply, it's telling you that the demand side doesn't care about $1 anymore, and that they're starting to overwhelm that supply that might be there. So it's really next high close for me because we've got everything else in place. So I'm happy to go plus 1/3. Peter, and next high close. Next high close, that's what NHC means, so very happy with that one. SPZ, correctly, Peter noticing that this is also close to $1, but we can see actually that in the price action, it's not as influential as the last example. If we go back to the last one, so SGI, we're probably going to find that this is the first time we've ever been to $1. So of course it's influential. Did we spend time at 25 cents? Yes, we did. So people are quadrupling their money. Some probably spent a little bit of time at 33.3 cents. So psychologically, that $1 is going to have a far greater impact than if we were talking about SPZ, for example, because we've been to $1 before. And you could argue that it was $1 that actually killed it last time, really, wasn't it? It was this candle here was the first time this stock ever traded above $1. And everybody thought, holy dolly, what a clever investor am I? And they decided to sell on that day. And there must have been good news on that day to make it jump up like that, but yet everybody was happy to take profits. And then, the people who got in at the top, they were disappointed that they got in the top. They wanted to get out the next day, maybe to limit losses. That caused a bit more selling, which caused a bit more selling, which caused... Who knows? Anyway, the point is we've tested $1, we've dealt with it, we're past that. And that's why it's not a problem anymore. And that's why you're not really seeing any influence of $1 coming up in the price action now. So I wouldn't worry about $1 this time at all, Peter. I put this in tonight. It's definitely made my short list, but I don't think it made the final list there. You can see that's the final list there on the left-hand side. We might do them after this. But it definitely made the broader list. I think it's very good. And I was really, really pedantic tonight on the on what made the final list because I just wanted to just play it a little bit safe ahead of tonight's risk event. But certainly for me, that is every part of it's one of those hybrid setups. It's one of those continuation turnaround setups, isn't it? Continuation because we've got double greens, but turnarounds because we've interacted with the long-term uptrend ribbon. Plus 1/3, not next high close because we've had a high close. It's good to go. It's on my list. FRP, if you've got it, plus 1/3. If you don't, happy with that one. We might as well go through tonight's feature list. All white candles there, double greens, can't fault it, nowhere near $1. So that one made the list tonight. Let me get rid of that, go zoom normal, just so we can compare everything on the same basis. CWP, a very shallow pullback, the dink, isn't it? It's that dink. And going again with a very strong candle today and pretty good volume characteristics as well. Drone Shield actually zooming out now and noticing the point of supply that's not actually that far away, to be fair. But I'm happy to go. I'm happy to go on the strength of the candle and the volume there. So plus 1/3 FRP. EOL, just very simple on that one. Probably nothing more needs to be said. Nothing more needs to be said on that one either. Very, very solid. And all of these, I think, have, this is not the first time that they've been featured charts. Some of them, I think, have been in there many times. Megaport's been in there many times recently, and that's a really nice little chart. Little dink back towards the short-term uptrend ribbon. I lied. This is Syrah's actually. This is actually Syrah's first appearance, and this is the turnaround setup as well. And I thought about putting it in on this day, and of course, 2020 hindsight, I regret it now. I couldn't put it on that day, and then today's the day. But I guess in many ways, the reason why I didn't is it hadn't really had the dink we saw here, right? The risks, something like ASM, which is in a very similar boat of what they do, Well, they'd be classed in the same category. Okay, I know they do digging for different things, but not all that different. So it hadn't had that dink, intraday dinks, and that's what made that very strong. But I think this was enough. I think this candle here is kind of your dink, and then today's your confirming candle. So I'm happy to go on that one as a turnaround setup, and WTM also as a turnaround setup, but maybe becoming more of a continuation setup there also. So they are the feature longs. Let's look at the feature shorts, and if you're looking to balance out some of that increased exposure that you might be looking to take because of what we said about the portfolio management model at the start, then there's not many shorts that you could go to. Amcor, Avita Medical, CSL, back on that list. And I think approaching a really important level here. Because if it was to trade beneath 230, I think that's the lowest it's been for quite some time. EBR, which was an interesting one because it wasn't that long ago, it was on the longs list, and it shows how quickly something can find itself on the short list. And again, I don't think these are the first appearances for any of these stocks. They've been on several times. PFP there, the funeral parlour, and SKC Sky Cities clearly hand down the worst trend of the lot. Okay, we've got one more for Peter, then we'll head over to your online requests. Thank you everybody for being so patient. And we've got now ALD, and I'm not sure Peter asking, he just says also ALD. He doesn't tell me what kind of setup it is, so he could be looking for a short here. I don't know, because it is a long-term downtrend. It is demonstrating some supply manifesting here at the long-term uptrend, a long-term downtrend ribbon, and some pretty convincing candles there for a cheeky, sneaky little short. I don't know, Peter. I don't know what you're actually asking me about there. It's not a long, and for me, it's probably not a short either. I think there were better ones there also. So let's keep moving. To your online requests, we've got A4N. We'll get to that in a second. Read AI meeting notes. Who's that one from? Don't know. Oh, maybe that's for me. You know how every app you're opening now and every web page you're going to has a little pop-up. You didn't ask for the pop-up, but it's got a pop-up now telling you for all of its AI credentials and add-ons that you probably don't need. Maybe that's what that is. I don't know. So I just killed that. I don't know if you could see it. Let's go to Avant. Avant saying hello. Hello, Avant. Roscoe saying A4N. Oh wow. Okay. Well, that's a decent rally, and I think I put it in yesterday, didn't I? As in this morning. So on Friday's candle for this morning, and now we've got Monday's candle, and that's because it had dinked. I know I saw it here as well, same as you, Roscoe. It hadn't done enough for me on this candle yet, and then these candles didn't stick, unfortunately. And either of those candles would have been the plus one third, but it just didn't get the right candle to here, unfortunately. So yes, it meets the criteria. In my heart of hearts, is this one that I would put my money on? No, it's not. I think I'm a little bit concerned about that and that. I think there are other setups that are better than this, but it meets the criteria, and that's my role is to help you find these, have a look at them, and it's your job to assess them. Ask me for help. I'm happy to help you, but that's what I would say about that. I think there are better setups out there. I would have liked it better if we got the trade down here, because from a reward to risk perspective, it would have been a better setup, okay, than what we're getting now. That's all. Okay, so down here, I would have been much, much more interested. That's all I'll say about that one. Let's go to some sus recent scandals with top and bottom shadows. I think I answered that. Avant's got thoughts on KAR, which is also trying to turn around as well. Not quite there yet, Avant. We still need to see, for me, I think we still need to see a dink. We've kind of covered off on that already today. So anything that looks like this, and I'll be more interested in it. Having said that, again, how interested will I be? Probably not very, I'll be honest with you, just because I'd be a bit concerned about that. But, you know, if it was to start to deal with that, I might be more interested in it. But then, you know, I don't know. I'm just not that enthusiastic about this particular one. So something subconscious there is saying that we're probably going to find substantially better. But yeah, I can see why you're looking at it in terms of it's getting closer to a turnaround setup. But it's not there either, so I don't know. Why are we talking about it if it's not there? You know, when it's there, then ask me about it. Because let's face it, ask me about that today is completely at odds with everything we talked about last week, is it not? I think it's kind of wasting our time. Let's go to CAT, which is not wasting our time because it is a setup. Okay, I'm teaching you my setups here. Hey, I know I'm sounding like an ogre this week. Okay, ask the question if you're not afraid to get admonished. Because I guess if you don't ask the question, you'll think it's a turnaround setup when it's not. My point is, geez, we spent a long time talking about turnaround setups last week, and we're still not getting it right. Let's go to CAT. which is a continuation setup. So we've got double greens, we've got rising price action, we've got a predominance of white candles. And there is a little bit of a supply side candle today, but not dissimilar to what we saw in the rest of the market. And if we want to compare it to how it's going against the rest of the market, we can see down here with the relative strength comparative, it's still very, very strong. So that's not a problem really for me. I'm very happy with this. I've got really nothing to add compared to last week when I said plus 1/3, next high close, FRP if you've got it, and happy to go ditto with that. See, I love talking about this stuff. I'll happily look at that chart every week. If the only thing I have to do is copy and paste plus 1/3 NHC FRP. For me, that is not a waste of time. For me, that is the essence of the strategy. That is exactly how the strategy works. That is exactly what I hope for each and every one of you to have 10 out of 10 of your portfolio doing that. We just go and copy paste, and on your broker platform, you're obviously acting it, but that's what you're doing with your analysis, okay? That's not a waste of time for me. I think that's brilliant. Let's go to the next one. There, actually, we've got another one here for Avant, which is Botanical, which was trying to turn around, isn't it? It's one of those dirty turnaround setups. Okay, by dirty I mean V-shaped, A-shaped, V-shaped, A-shaped around the long-term trend ribbon, which is trying to do its job. But because there is a building of supply in the system, it's struggling to do its job. And you know, your warning signs that it's struggling to do its job is kind of down here, breaking through low peaks. Today's candle is a dead giveaway. But having said that, it did try again. It tried again, didn't it, with that lower shadow? But I think if we're trying that hard and ultimately our overall direction is roughly that, I have to question whether it's worth it all. I might just get rid of some of that. Okay, go back to Zoom normal and just let you look at it for a bit and think about how you feel about it. Is this in the too hard basket, or is this clean consensus? Is this everybody on the supply side thinks it's brilliant? They don't want to sell it. They think they're going to get more for it now. That's why they're holding on. Or are the supply side a bit nervous and they're selling to rallies, taking those opportunities to get out? And then on down days, they actually hit it pretty hard because they're really nervous. Is the demand side standing firm, just hoovering up everything, causing big white candles, causing long lower shadows, and therefore not allowing long upper shadows and black candles? I don't think it's the case. I think we've got a very mixed price action picture there. I think we've got a lot of confusion in the market, a lot of indecision, and therefore how can we be decisive? So it's a pass for me. All right, let's keep moving. We're going to go to Adonis. Evening card, we looked at Meta and Tesla last week. Okay, well, I might hold you there because we'll look at the US stocks at the end. Missy's also got Pfizer. Missy, I'm sorry I forgot your Pfizer last week, but I promise I won't forget it tonight. David's got TLX, and that got hit today, like many of those pharmaceutical stocks. And this one, we looked at it last week, and I'm pretty sure we liked it. Maybe if not last week, certainly the week before. We certainly talked about it in a very positive way, because if that's 12, then 5 is that one. So we probably looked at, if we looked at it last week, I can't remember, we would have said it looks great, happy to hold, next high close, happy to buy. And then I reckon, given that the rest of the market's actually been very strong, I would suggest to you that the money in the know, the inside money, knew exactly what President Trump was going to announce after this candle and between this candle, which was the executive order that is apparently on the way. Not that this was announced in a White House press conference or to a journalist or anything like that. He tweeted it on Trump Social that he's going to make an executive order to bring down the price of prescription medicines. And look, I don't know Telix well enough, but I do know enough to say that that's probably what happened to it today. So we can't foresee these things, unfortunately, but we have to deal with them. And yeah, for me, and I totally concede that tomorrow it might well be straight back up again. I don't know. It's a dynamic situation, but only going on what I can see, I'd struggle to have some risk on this one. And again, my hunch is because we were all out down here, right? We were all out down here. And you can see starting to get in somewhere around here. I don't think you would have got to a full risk position yet. I think on this day here, if you got to 2/3, I'd be plus 2/3, I'd be surprised. So let's assume you did. Okay, let's assume that's a 1/3 day and that's a 2/3 day. Okay. Where could you have got out earlier than this? Probably not. Probably not. I mean, this day here is disturbing because we closed beneath the short-term trend ribbon and the nature of the candle itself, but we hadn't closed beneath here. So today's the day. Today's the day we've closed not only beneath this one, but this one and the strength of the candle. Therefore, I have to say ZRP. Okay, and I don't know what's going to happen next. It could be up 1,000% tomorrow. All I know is what my model's telling me, and I've got to follow my model, for better or worse. So ZRP for me, unfortunately, on that one, David. Hopefully, you've got a Trump social account, and that way you can stay abreast of all the latest policy developments from the White House. Rishi's got, hi Carl, hope you're well. Has lithium bottomed? Is there any reason about Liontown Resources share price increasing? Not that I know of. I did read on social media, funnily enough, that there's potentially a corporate event in the offing. So somebody's thinking about making a bid for it. If that's the case, it could be $1. I don't know. That order of magnitude, that might be the price. I mean, it has rallied for 50 cents. So if somebody was running the rule over it, 50 cents, they might go 80 cents. Right, now they might be forced to go $1, but it won't be $2. You know what I mean? Like, it won't be $3. It won't be the price of the last bid up here. Was that Gina Reinhardt up here? Was that Gina? And management rejected it because it didn't reflect the fair value of the company. Oh, jeez. Oh, sorry, I couldn't contain my laughter there. Yeah, look, order of magnitude, that's what it'll be. Hey, would I buy here? No, I can't buy here. But it might be a takeover, or it's cheap, or it's got a great asset, or I wouldn't have a clue. I don't know, and I don't care. You're asking the wrong person, and there's going to be other talking heads in a little box on a window somewhere on YouTube that will tell you to buy it. And if you prefer, go find them if that makes you feel better. But look, I'm not into this sort of stuff. Not to say I can't be into it, but much like I said last week, and we spent about half an hour, I think, on it, talking about it last week in multiple case studies for a turnaround setup, for it to be something for my consideration. This needs to be amber. This needs to be green. We need to be rising peaks and rising troughs, which actually I think we might be, but I'd have to really double check, and a predominance of white candles, which I think we are. So we're not all there in terms of the setup. Has lithium bottomed? If we look at the lithium price hasn't bottomed. No, I mean, that's impossible to say. It's because, not only because it can't tell the future, but because it's still falling at a rate of knots. Today was the first update in a while. No, I think it'd be very premature to call that as well. What was I going to say? But we are seeing a bunch of lithium companies not plummeting in line with the lithium price. So some people are therefore concluding that the bottom is in. I'm not one of those people. It's just not the way I trade. But like I said, Rishi, the great news is there's a whole world of social media out there that you can find your echo chamber. Isn't that, well, that's the best thing about social media, ladies and gentlemen, is that if you want to hear something, you'll be able to find a place that you can hear exactly what you want to hear. I'm here to tell you the stuff you don't want to hear, I guess, because I've got a system. Let's go to, since today's Trump decision regarding China trade, what's your expert opinion regarding antimony? I wouldn't have a clue, sorry mate, no idea. But if the stocks start coming up on the scans showing short-term uptrends, rising peaks and rising troughs, predominance of white candles, good interaction with the long-term trends, then I'll be all over them. And if you're interested in hearing what I have to say, then probably just best waiting for that to occur. Let's go to Boss Energy next. This one's for Ken. This is one that I have put in. So this is a great segue from Liontown Resources, because Liontown Resources, in comparison, I don't have a circle. Where's my circle? Let's do a triangle. Why not? It's about here, isn't it? Liontown Resources, about... that's why I don't draw triangles. It's about there. I wanted to do something different. It's somewhere sort of here. Okay, let's go make this Z order 0, and it'll come in front. So it's around about there. Okay, so it goes to show how quickly things can turn around as far as my system's concerned. And we can see here the interactions we've had in the past. Let me get rid of all this stuff. I'll go back to my rectangles. And what I want to do is I want these to appear on the front. So what do we go? None. See what that does. and go 0. And yeah, that's not bad. Let's go try that, see what that does. Oh, there you go, it's getting better. So we can see that, and we can see that, okay? And neither of those occasions, if we go back, very close here actually, wasn't it? So very close here also. So if we look at the interactions with that long-term trend ribbon, okay, let's change that one to green because we can. I think they're fairly reliable. And I think when you have a system that's fairly reliable, I think the sensible thing to do is to stick with it. That's gobbledygook there. Okay? And this is why I don't not stick with my system. This is why I don't get into Liontown on a whim. So I think Liontown is here in comparison. I know we're talking about Boss Energy. This will make sense in a second. Okay, on this candle here, I ran Boss Energy as a feature chart. Okay, so that is the best, one of the best on the day, setups I could possibly find that I would be more than happy to put my own money on. Okay, so is it possible? Let's go back now because I don't want to be grumpy Carl all night. Okay, my job here is to teach you how to use the system. And if you don't want to use the system, go find another one. I said that. So there's Liontown. How does that compare to Boss Energy? Okay, Liontown, Boss Energy, and there are extreme similarities there. Okay, so it's not that I'll never buy stuff that's gone down a lot. I just need to see signs that the demand supply environment is shifting in a way that demand is once again overwhelming supply, therefore facilitating price to rise, and by extension that it may continue to rise even further. Okay, and until that, I'm not interested. So what does Liontown need to do to get my attention? Not a lot more. Something like this. Something like that. Yep. Here's one I prepared earlier. Okay. You might say, oh, Carl, that really didn't do the dink. And I'd say you're right. And I basically pulled rank here. And we talked about this earlier in the session where I said, well, it was an intraday dink. And it's this candle here. So that's the intraday dink. So that, for me, that push, pull back, supply side's in control on that day. And then you get this emphatic day, which is saying, you know what, that supply side, is that the best you could do? Okay, you're done, supply side. Like you are not in control anymore. And that's why, for me, that was the day that was plus 1/3. And it was a feature, right? And then I think I ran it again here also. Nothing really doing since then. Nothing's going to go up in a straight line. But I think we are moving risk back into this one. How long will it go up? I don't know. And that's why we're not yet moving risk into this one. You might say, hey, Carl, Liontown's going to do what Boss Energy did. I'm going to get in now. Good luck to you. Ken was asking about that supply level coming in on Boss Energy. There is a little one, I think, coming in from here potentially. So if we extrapolate that one across, yeah, so that's it. That's literally what that candle was there. Okay, that is the manifestation of some of that supply coming in. But if we get through this one, and look, today wasn't a write-off, it wasn't a great day, but you know, this is a good candle here. Today was ho-hum. The broader market was like that anyway. I think we're holding pretty strong, and it all comes down to the shallowness of the pullback now, Ken, really, doesn't it? And if that pullback stays shallow, we're now testing and probing this point of supply. We're removing a bit each day to the point, hopefully, that there's just none left. And there's the demand that we know is in the system is prepared, therefore, to pay higher prices to get their fill. And then there's nothing really until we get all the way up here. So that actually clears the path quite nicely if that occurs. So this is it's FRP if you've got. We're obviously not adding risk on based on that last candle, but happy to hold what you have on that one. Let's go to Robert, who's asking about NWC. Okay, there you go. Looking very good. Last time, I think, you know, that FRP plus 1/3, I don't know if you would have hung on to that one. Got a bit dicey there. You wouldn't have added more than 1/3. You might have gone scratch, and then maybe you're coming back in. Pardon me. I'm pretty sure I ran it on this day, correct me if I'm wrong, as a plus 1/3. I might have even run on that day. I didn't see it today. I did. I can't remember if I ran it, but it would definitely be in the list today. I can't remember, but it would be in the list today, even if it's not. And I'm just seeing now turnover filter 0, so maybe I'm thinking of something else altogether. Was the turnover? It just rings too much of a bell, or maybe we just discussed it here. I don't know. I'm trying to figure out, or it could just resemble like 100 other little stocks like this. I just want to get rid of that because it's distracting me, but that, of course, is the good price action. But what I'm going to write on the screen now, for what it's worth, is plus 1/3 FRP if you've got it. There's absolutely nothing in this chart that tells me not to own it. There's a little bit of supply up here. And I think we're ways enough away from that to not have to worry about it. But it's a turnaround setup in that we have pushed above the long-term trend ribbon. We've certainly dinked at it. I mean, that's your dink. Light green, rising price action, predominance of white candles, and some nice volume actually to boot as well. This is a really nice base pattern through here. So happy with that one for you there, Robert. NPK. Okay, Many Peaks Minerals, still looking good. We looked at this one over here. Hasn't done a whole lot since. It's still holding the long-term trend ribbon there. This is all one move down, because this is an inside day. Actually, no, that will make that, because that's an upside day, so that will actually make this a little dink in here. Okay, so look, if you took some off the table there, I wouldn't have complained. But otherwise, happy to hold what we've got here. Is today's candle sufficient to add risk to it? A little bit of an upper shadow. Maybe just holding you back. There is a little bit of supply just lurking in the system from here, from here, from here. That's all. Otherwise, it's very close. I mean, you could go next high close. I don't think you have to. I'm happy to go plus 1/3 FRP on that one as a continuation setup. So 2 out of 2 there, Robert. I'm happy with both of those. Let's go HCT. Very happy with this. I don't think this one's come up. It doesn't ring any bells at all. Holista Colltech. I just love the sound of that. Holista Colltech. It just sounds so high tech. And you've got to have a good name as well. Let's go to the weekly chart. No, I don't think there's anything too sinister going on there at all. I can't fault this. I love it. It's one of those little specky ones. I want to have some risk on. Hey, if I lose, I'll lose, but I'd regret it more if I didn't have anything on it than if I lost. Because I go into these things eyes wide open. 3 for 3, Robert. Well done. Let's go to Hayden. It's got ARU. This gets back to Rishi was asking about rare earths and things like that. I mean, this is a rare earth stock. And we're just seeing a bit of a pullback here. I don't know. Hayden, do you reckon it's worth hanging in there and seeing if this one's going to come back? I can't answer that. It's one of those where I'd go, especially if I've only really sort of added a third on it probably. It's just like, well, it's going to be dead money for a while, and there's other stuff I want to do with it. If there's nothing else you want to do with it, you could give it another candle. I don't know why you would. I'm beating around the bush. I'm trying to sugarcoat it. I don't think you can. I just think it's a ZRP and just move on and find something else. And if it starts to go back up, it will. It's very hard for these ones to go anywhere because there's so much paper as well, isn't there? There's so much stock out there. I don't know. You're going to have to kiss a few frogs to find the prints, unfortunately, on these ones. Can you talk to the 3 black candles before today's candle? Okay, well, the 3 candles themselves, I don't think were anything too sinister, and I don't think you would have done a whole lot before this. So if we look at the price action, that's all one line down here. So once we started to make the trough, which was confirmed on this day here, so we know we've got a lower peak, which then makes this important, and we'd be looking for a close beneath that. Okay, and go for at least a couple of pips beneath that. On an 18.5 stock, it's probably 17.5, which is today. So today's the day that you would do something, and not before. but that's just the nature of the tightness of that price action. How we go for time? Okay, might just call last drinks. Perry's got the last note there that we'll get to. Of course, we'll do the US ones on the way back up. Let's go to Floyd. Floyd's got. I hope you're doing well. Well, thank you, Floyd. I've got a few, if they weren't already done. SYR made the list today. There you go. I know you probably asked that after I talked about it. But yes, it did. And this is the one we talked about, that idea of the intraday dink in here, isn't it? Just this idea that the supply side tried to have a crack. That was the first close. I want you to understand why I have gone early on this. That's the first close above the long-term trend ribbon in quite some time. So something is going on. Something is changing in that demand-supply environment to cause something that's significant to occur. And that's why it got my attention there. So it's a yes for me. If I didn't write it before, I'll write it now. +1 third FRP if you've got it. I don't know where they're going. We do know that turnaround setups have with them naturally, because they're trying to turn around, like that ARU one. I think this is cleaner than ARU. It's a great little comparison, isn't it, when you're comparing the pairs. Look at the price action here. Look at the candles. You get a lot of candles with blocky candles, sticky bits coming out, all indecision. You know, yes, it's meeting criteria, but not very clean. And then we've got Syrah, and it's just it's a little bit cleaner. You can see the candles a bit crisper. Not huge, and that's why they're good to compare. They're not a huge difference, but there's a difference. And some are going to be even cleaner again. But at least, hopefully, we can see that that's the price action just seems a bit cleaner there. TLX, not for a short. No, I don't think we're shorting TLX because it's still in a long-term uptrend. So for it to become a short, then we would need at least an amber trend there to be looking for shorts. If you're going now, you're being very, very aggressive, I think. I'm going to get rid of some of that stuff there. It's a bit confusing. Now we can see what's going on. I think you're too early for a short. And what could happen is that you get one of those, like even intraday candles there, that try to rally and then get forced back down to the lows. And that might be a signal, and it would be the most aggressive setup, but I wouldn't go before then. If I went at all. CYL, I think, still looks very strong in a gold sector, which I think is starting to find some supply, starting to move more into an equilibrium phase than just this outright double green phase. This is the easiest. This is the lowest volatility. This is the add risk. This is the just be careful. Be really sure about it if you're going to. I put this on the list today. I think today's candle, with that downward pointing shadow, the white body there, relatively high close, in what was not only a pretty lousy day for the ASX, but an awful day for gold stocks. Gold stocks were down 3.5% today. And there were some gold stocks that were down significantly more than that. And yet, in the category, this held its own. So that impressed me on this one. And if you're looking for gold exposure for some reason, this would be, I think, where you'd go. That and K&B, Kununberry Gold, also had a very strong day in a very weak market. Those are the two that stood out for me today. So I did actually put this in the broader list. I didn't make it a feature, but as I said, caught the attention. FRP, if you've got it. Where would we change this idea of FRP? Because I suspect a few people have this one because we went in my feature charts. I think out of anything, I think this has made more feature charts since ChartWatch started than any other stock, off the top of my head. So certainly there, I'd say we're zero risk position on a close beneath that, and I'd say we're starting to reduce risk on a close beneath that as well. So if that is, let's say, close below is minus a third, and then whatever happens in between, I think, close below is ZRP on that one. So at least we've got a roadmap now on how to play it. That's good. Thanks, Floyd. ALX for Michael as a turnaround setup. I agree that it is warming up for a turnaround setup. I would like to just draw your attention to the price action and the candles, and they're more like ARU than they are like SYR or CYL, aren't they? So that's usually enough to sort of push my attention somewhere else. But I agree, you're seeing the right thing, and that's what I want to get across in these webinars, is that yes, you are seeing a turnaround setup because we are amber on the long-term trend ribbon, we're light green on the short-term trend ribbon, we're rising peaks and rising troughs. We are now predominance of demand-side candles, that's true. And we didn't really see it so much here, did we? We didn't see that decisive trough come in above the long-term trend ribbon, which I put to you, ladies and gentlemen, has done a pretty good job. I don't know, better than average job, shall we say, of telling you where the dynamic supply has been. Or you could say it's been absolutely perfect and it's nailed it. This was the signal there. I ran it as a 1/3 in the main list. It didn't make feature, and this would have to do something extraordinary to make feature just because of the sketchiness of some of that price action and those candles. But to the letter of the law, plus 1/3, that's the setup. Otherwise, today's FRP, there's no signal there today. But some people, I don't know, they just might want to buy a toll road for whatever reason, or they like the dividend yield. I don't know. They don't care so much about these things. But as a straight out trade for capital gains, yes, it meets the criteria. I think we're going to find cleaner setups though. But no harm if you want to put a third on it. This one has had a tough day today. Not a lot of volume. It might just be broader market stuff. It's not the most liquid stock anyway. But I don't think in and of itself it's enough to panic just yet. Not a great day though. Yeah, it's disappointing because it was looking so good here. Where would I start to take some action on this one as a precautionary measure? Even that I think is a little bit pedantic. I'd probably just wait and see the candle we get. So let's just go check candle on close below and assess for potential minus 1/3 and leave it at that. I want to see the candle, what sort of candle we're going to get there, okay, before we decide what to do. I don't think it's that bad. Everything else is still very, very strong. That one also from Michael. Robert's got another one, PTR. Yes, it is on the rebound. Yeah, I like this one. It hasn't come up in the scans, which is interesting. It's just not hitting the turnover filter. That doesn't mean it's bad, it just means it's not hitting the turnover filter. But I don't mind it. Let me get rid of wall of latent supply. Get rid of these. So we can just look at it in its entirety. And yeah, a little bit of supply probably coming in here. And I think today, dealing with it admirably. So no complaints on its behaviour today. A little bit of an upper shadow saying, yeah, there's a little bit of a manifestation of supply, but otherwise very strong. Almost exclusively white candles through here. Back to demand side control. We're just about to cross over on the short-term trend, but this is one of those hybrid sort of continuation turnarounds. Held the long-term trend ribbon really well. Double bottom, high bottom, there, high trough. So no complaints. Oh look, I think it's okay. Okay, as in like 7.5 out of 10 for a turnaround setup or a continuation turnaround setup. It's good. Yeah, I don't mind it. I don't know if I would have a crack at 1/3 here, but I wouldn't stop you from doing so if you wanted to do it yourself. And I say that on the basis of I think I found better setups today. That's all. But if you've got it, FRP. If you don't, and you're willing, then plus 1/3 also. Let's go to Jackie's got. Oh, well, there you go. PTR also asking for a PTR. Interesting. So great to see Robert, Jackie seeing the same stock, because I agree with you both. And Jackie just asking, do we need a dink for a turnaround? No, I don't think you need a dink. I think we've had the dink from the long-term trend ribbon. So there's a little dink in here, I think. A little dink in there, back to the short-term trend ribbon as well. So no, I think that's fine. I don't think we need to dink here. I think we need to see a nice solid candle there to say that we're not so concerned about that point of supply. It's not worrying us. And I don't think it is, to be honest, based upon today's close. So I'm happy to go. Let's go to Pendra, RWC, turnaround setup. Let's have a look, RWC. Not yet, it's still too early for a turnaround setup, funnily enough. And I won't ask you all, I know many of you, not all of you clearly, not all of you, but many of you took down those rules and wrote them down and pinned them somewhere where you do your analysis, maybe where you're watching your webinars. And I know other people didn't. No, this is not a turnaround setup yet because it doesn't have an amber trend ribbon. It doesn't have a green short-term trend ribbon, but it has everything else. So it's probably too close to the long-term trend ribbon to be an aggressive setup as well, because we want to make that one-to-one reward to risk, don't we? So it's just nothing, unfortunately. And you say, oh, but I should have bought it earlier, Carl. Oh, well, maybe. Or maybe it would have just hit the trend ribbon and went down. In a different market, it probably would have. Don't forget, a lot of this stuff, which, let's face it, was awful that long ago, is probably only going up because every other bloody thing's going up. And if that wasn't the case, they would actually still be the worst of the worst. So it probably, what we're seeing here is a lot of short covering. And I guess this is where the system tries to keep you safe, because it tries to delineate between short covering, which is only going to get you so far, probably to that long-term trend ribbon, and actual buying, positional buying, which therefore has to take you above that long-term trend ribbon. Okay? And we've seen that so many times today. So this is a nothing. It's not a setup at all under my model. Let's keep going. LTR will be down next week according to my crystal ball, says Michael. Yeah, I wish I had your crystal ball as well, Michael. I'll be all over it too, okay. Sue saying, hi Carl, what are your thoughts on FANG as a turnaround setup? Yeah, look, it actually did come up. I didn't list it today. I just thought there were other setups that kind of deserved to be put in ahead of that. But yes, it definitely came up. So if you wanted to go that way, that's it there, the FANG ETF, no complaints. And really what you're trading there effectively is the Nasdaq, being long the Nasdaq. I think you want it to be in today though, because if you get that big gap up tomorrow, who knows what price you'll be paying on today's open. So I know that's silly. Oh, you want it to be in today, not tomorrow. I mean, you can't turn back time, but there's going to be a bit of a pop there. But yes, this is a turnaround / continuation setup. It's back above the long-term trend ribbon. The long-term trend ribbon actually has gone back to green. We've got a green short-term trend ribbon. I know this is repetitious, but I repeat myself over and over in these sessions for good reason, and I never get tired of it. Don't worry. Geez, Carl must be getting tired of saying light green, dark green, predominance of white candles. No, ladies and gentlemen, that is the system. That is the whole point of what I do. It's the repetition. The consistency is what the system is, and that's what keeps you safe in the market. So I will never get tired of telling you what a setup is. And this is, I think this is a setup, so that's fine. Let's go to Ken is saying Boss Energy, based upon the latest short report on 1st of May, there hasn't been much short covering. Is that a concern? Not for me, okay? Because all I need to know, everything I need to know is there, okay, Ken? And everything I don't need to know is not on there. It's really that simple. And that might confuse some people because I work for a company that writes lots of words about stuff that isn't on the chart. And, that's okay. Some people want to read those words and it helps them with the way they choose to invest. But for me personally, none of those words mean anything, except for when I'm writing chart watch, of course. That stuff still means something. To each his own. And I've told you what my own is. AMA is definitely a turnaround setup. It definitely made the list today. This is done, I think, pretty well as a turnaround setup for us. Who's this one, Michael? Are you on it, Michael? I think there's a good chance you are, because it's been in several times, and it's just kind of plodding along without really bothering anybody, isn't it? Not doing anything spectacular, but still moving in the right direction. So yes, this one definitely made my list today. And it is a plus 130. It didn't get onto the feature because there wasn't a lot of volume there to speak of today, so there wasn't a whole lot of interest. But I can't fault the trends. I can't fault the setup. So we go FRP for me on that one plus 1/3. And we're down to Perry, where I said we'll head back up the other way, which we're going to do now, and do all of the US stocks and we'll head over to our Trading View screen to do that. If you do have an Aussie stock, you kind of need to get it in right now. I'll give you 30 seconds because in about 35 seconds I won't see it because I'm heading back up the list. Okay. So I'm going to do Pfizer for Missy because sorry Missy, I forgot to do that for you last week. And I'm sure Missy had some context for Pfizer, and I apologise Missy, I can't remember the context. I've just got a note here to pick it up for you. I wonder if you were asking for it about a short. I don't know. I would say probably not a long, not a short at this stage. But yeah, maybe closer to a short than long. Yeah, I'm trying to figure out when you asked me about it last week, what it would have been closer to. Maybe you did ask about it as a turnaround play. Okay, it's not a turnaround play because again, we don't have that amber long-term trend ribbon. We don't have a light green short-term trend ribbon. We do have higher peaks and higher troughs, but they're not really clean higher peaks and higher troughs, are they? Where the last trough is at or above the second last peak. And the candles are a little bit sketchy as well. So definitely not a turnaround setup, not an aggressive setup either. It was too close to that long-term trend ribbon. It's obviously not a continuation setup with double greens. As for the shorts, I'm just going through the motions here, and it's going to fall into one of 6 categories, isn't it? 3 long setups, 3 short setups. It's closer to a short setup, a continuation setup, because we're double pink, aren't we? We don't quite have the lower peaks and lower troughs, which I'd prefer, but we are moving back more to a predominance of supply side candles. So covering all bases here, Missy, closer to a short than it is for long for me. Heading now over to Perry's stocks, we're going to start off with CRK, and that would be Comstock Resources. Look at that. Nice and clean, beautiful breakout off a very substantial base pattern here, around about $20. And I wonder if $20, surely not for US stock. This is surely not the first time it's been there. Well, it's the first time it's been there for a very long time. And you can see, it's got this, like a very long time, like 10 years since this was a $20 stock. So I think it's conceivable, therefore, that the market has become used to this idea that $20 is as high as this thing could possibly get. Hence, we've seen here the issues that we've had at $20 in the past. Okay, and then we work through that supply. We work through it, and now we'll get back to the daily chart here. Obviously, we've managed to get through this time, and that old supply zone, in theory, will act as a demand zone going forward. So that's a nice base that we've got there. Otherwise, I can see double greens, light green, dark green, and some nice price action at the end there, and a predominance of white candles. I can't fault this one. This one looks very good to me. So happy plus 1/3 risk on this one. Getting some skin in the game as fast as possible. If you've already got it, then happy to go FRP, and you decide whether you want to add some risk to it. Let's click save and go to Perry's next one, which is ATGE. So that is Adtalem Global Education. That's the best chart I've seen tonight by a long way. Absolute ripper. Look, I mean, that's your interest signal there. So I'm sure that's when Perry added his first third, and he's probably going to add some tonight. And on the base, look, the only risk tonight, Perry, and you probably faced this situation many times, is we don't know where that open's going to be, and the risk is that it gaps up and then comes back down. We don't want to see that. So, yeah, I find these the trickiest kind of nights to enter, where that open could be anywhere. So, ideally we can get in at roughly the same price, as Friday's close. You might end up struggling to do that, but for what it's worth, very, very strong setup. Best I've seen today, FRP, if you've already got it, plus 1/3 if you don't. Going to Perry's third one, which is CTVA. And this is really just the art of trend following here, isn't it, with Perry setups every week. We'll just head back out here and check out the weekly. Oh, there you go. With a nice, clean breakout. Also on the weekly chart there. So no complaints for me on this one. Price action wasn't as good. It wasn't anywhere near as good before this. So just concerned here that the leopard might not change its spots. I know it's had a big move. I know it's cleared all that out. But, this was the indecision it was showing beforehand. I fear, we might see some of that creep back in. Whereas we didn't have that indecision on that last one. It was just clean before, had a big move. It's more likely to be clean afterwards. There was less confusion. There was more consensus. That would be my only criticism of this particular setup. And that's why you tune in, is to say, you want that criticism. You want that little thing maybe that you hadn't thought of, that maybe you go back and say, hey, actually, he's right. This one was a bit sketchy before. Yes, it had a big move, but then it was less inclined to have that clean move. Yet this was really clean before, and it stayed clean. So that would be my only criticism. It's pretty minor, because otherwise everything else is intact here. FRP. Just keep that saying in mind. The leopard doesn't change its spots. It's very, very true when it comes to stocks as well. Dave. Well, this is my favourite code for the evening. Dave. Let's check that out, Dave. I've not heard of Dave before. It's just Dave. Dave Inc. Must have been founded by Dave, owned and run by Dave. All employees named Dave. What the hell does this do? Very, very clean here. Yep, no complaints. It's just a ways away from that light green zone. I'd love a dink if I could get it, but it might not be the case. I mean, the way to play these is kind of just add a little bit of risk and then ask questions later. But there's a reason why it's moving like that. It's because everybody loves Dave at the end of the day. Okay, thank you, Perry, for those four. Let's go up the list again, and we're going to go to the gold ETF. And I'll type it in here. I know it was in theory an ASX one, but we will find it here. That one there. Let's just look at this using the rules. Okay, so Sue's asking about this. Should we exit this with gold prices falling now? Okay. I'll have to think about this, because is this one, this is gold, isn't it? This is based on gold and not upon gold stocks, because there's MNRS, I think, is the miners, right? So assuming this is just gold, yes, you can do your analysis on the gold price, because in theory it should be the same. So if you're more comfortable analysing the gold chart, you're more familiar with $2,936 an ounce, or whatever it is. Yes, and then transfer it. You don't have to wait for the trough to break here. Okay, you could do it here also, but this is going to lag a little bit potentially also, right? So to answer your question, if you think that it's time to de-risk or reduce risk on the gold chart, then this is just a reflection of that. So the answer would be yes. If we were just to analyse this in isolation, as in we've never seen the gold price in our life, just giving you that scenario, we have lower peaks. Okay, we have enough candles, supply side candles through here for me to be concerned that even right now I wouldn't want to be holding a full risk position. So that's what you have to ask yourself. Do I want to be holding a full risk position? I'd want to hold a full risk position even less if we were to close beneath here. Okay, so that would be a big no-no for me. And I would say, because we're also closing beneath the short-term trend ribbon there, I can't find a path to having any risk, I would say, beneath there. Now, just to confirm it, so I just want to cover all bases for you. We'll just have a quick look back through here, and yeah, it's going to be roughly the same, isn't it? So, we talked about this at the start, so really close beneath that trough there. So let's say about 31.89 or lower, just to give it a little bit of room. Closing beneath, that's zero risk position for me. So let's go back up to... and if I miss one of your US ones, please let me know. But I don't think there were that many tonight. I'm back up to Adonis here. And Adonis has, let's remove all drawings. And Adonis has for us Meta. Of course, the company that runs Facebook. And last week we said, we just wanted to see a little dink, because we were looking at the turnaround continuation, the hybrid setup. It's still a long-term uptrend, so yes, it's continuation, but it's interacted with that long-term trend ribbon. Really important for this type of setup, we The best ones, trust me, the best ones are the ones that didn't go below the long-term trend ribbon. Okay? This one did. So that would be my first just little cause for pause. Okay. Last time, I think we said we want to see a dink because we want to see how the supply side responds to this new idea of us being above the trend ribbon. We want to see a very shallow pullback. I think we're in the process of that. The last two candles, Thursdays and Fridays candles, are that dink, isn't it? The dink is happening as we speak. Those are a little bit more definitive in terms of supply side control than I would like. But if we see a clean white candle, it will still do the job. All right, so we still want to see a very clean white candle through here. So if we were to draw something that looks like this, and I know that doesn't look anything like what we want it to look like just yet, but let me try to turn it into something that does. And I'm not even sure if I can. Let's try that. Can we make it style? You can see what I'm saying. Text border visibility. I mean, where's colour? I mean, that's middle line. I can't even click on that. Oh, background. There we go. So if we go white, then we might see it. Border. Might let me select the border. Oh, there we go. Yeah, you saw what I tried to do. I tried to give it a border. No, opacity. Oh, there we go. Opacity. Look at that. That's the candle we want to see right there. The white candle is on us. Then yes, it would be a plus 130 for me. But we need to see it first. Okay, Tesla, TSLA. Similar setup. Donis is noting, and ditto, same thing. Again, I'd prefer if they had it plunged beneath Adonis. I challenge you to find 20 other setups that didn't, right? That are also doing the same things, but above it, and they're probably going to fare better. They're just more indecision here. But ditto on the last one. If you can get the candle, yes, technically it would meet the criteria, although Facebook is definitely better than Tesla, okay? But hey, I don't know. Some people just want to own Tesla for whatever reason. They want to do their portfolio, and they're just looking for a valid entry point based upon my system. Well, yes, there it is. And that's it. I think we've got everything. I'll give you one last chance to add something down the end there. If I did miss yours, if I missed it, then please let me know. I don't want anybody to go away disappointed. While you're doing that, okay, I have to do it. I have to say it one last time, just from a compliance perspective, and I'll keep an eye on that screen. But please remember that everything we discussed tonight is general in nature, has not taken into account personal financial circumstances, objectives, or particular needs. So before you do anything, please consider it very carefully or seek the help of a financial professional to determine its appropriateness for you. Trading and risking, because that's what it is, isn't it? Trading is risky. It's all risky. You could lose money. Just understand that that's possible, and it's always you who's responsible for the stuff you do, not me. Apart from that, and as I promised, nobody else has typed anything in, so we will adjourn for this evening. Thanks for joining me tonight. Hopefully you had fun. I did too. Got lots out of it, and we'll see you next time. All the best for trading. Until then, bye-bye for now.